So friends, today we are going to learn about this calculation of Sensex. How is Sensex calculated? Calculation of Sensex is very important factor in understanding the working of the stock market. Basically, Sensex is calculated using the free float market capitalization methodology. Free float market capitalization methodology is nothing but it takes into consideration only number of freely available shares which are available for trading on the stock exchange, that are taken into consideration for calculation of the market capitalization of a particular company. So this methodology is used to calculate the total value of the Sensex. We will understand this in more and more detail with the help of an example in the further part of the video. So let's understand how the Sensex is calculated. This is definitely understanding this particular point will enhance our understanding of the entire stock market. It's very important factor how the BSE Sensex is calculated and how even the NIFTY is calculated. Free float market capitalization methodology is widely used across the globe for the calculation of the indices in different marketplaces. So let us start understanding this particular thing with the help of an example. So let us start understanding how this Sensex is calculated. Basically, Sensex calculation involves, as I just said to you, that it involves basically free float market capitalization. Now let us understand what do you mean by free float market capitalization. Free float market capitalization is nothing but the share price, the current market share price, into number of outstanding share minus the logged in share. Now, as we know that total number of the share of the company are not taken into consideration, that is subtracted from the logged in share. Means like shares held by the government, share held by the directors of the company, private placement, and all those things are not taken into consideration for the calculation of the free float market capitalization. So it is basically the share price multiplied by number of outstanding share minus the logged in shares. As I just said to you that logged in shares are nothing but the shares which are taken into are held by the governments or directors of the company, which are not readily available for the trading in the market. Now we all know that. Now let us understand this with the help of an example. Let's say ABC Limited is a one company. ABC Limited company is having total share is 10,000. Since total number of outstanding shares are 10,000. Out of these 10,000, the 2,000 shares are held by the government. You can see over here, and the 5,000 shares are held by the directors. So these 7,000 shares will not be taken into consideration for the calculation of the free float market capitalization, but instead the shares available in the open market for open trading is only 3,000. So these 3,000 shares will be taken into consideration for calculation of the free float market capitalization. Let's say, for example, total number of free float market share, free floating shares are 3,000, as is just shown over here, and the current market price is 100 rupees. So total free float market capitalization will be 3,000 multiplied by 100, that is 3 lakhs. And as you can see over here, but while calculating the total market capitalization of the company, that will be 10,000 total number of shares into 100, that is the 10 lakhs. So here, how do you calculate the total market capitalization? And this is how it is shown that how do you calculate the free float market capitalization of a company. You can see over here. Now let us understand how the Sensex calculation happens. Now, as you all are aware that there are 30 companies in the Sensex, but we will not take 30 companies, but we will understand that how the method works. So we will consider two companies, let us say company X and company Y. Let us start with the company X. So if the company X is having 10,000 outstanding shares, and number of shares available for trading in the open market is 5,000. So with the help of this, we will calculate, and the current market price of the company X share is 100 rupees. So total market capitalization will be the total number of shares, the outstanding shares multiplied the current market price, is how it will be 10 lakhs. But the free float market capitalization will be only 5,000 multiplied by 100, that will be 5 lakhs. So the free floating market capitalization of the company X will be 5 lakhs, but total market capitalization will be 10 lakhs. So you can understand over here. Now same way we'll calculate the free floating market capitalization of company Y. So if the company Y is having total number of outstanding shares is 5,000 and only 2,000 number of shares are available for trading in the open market with the current market price of 50 rupees. So as we have just seen that the total market capitalization for the company Y will be 5,000 multiplied by 50 will be 2,50,000. But free float market capitalization of the company will be total number of freely available shares on the market, that is 2,000 multiplied by current market price, that 50 will be 1 lakh. So as we have just seen how we calculate the free float market capitalization of company X, and we have just seen how we calculated the free float market capitalization of the company Y. Now we'll move further to understand this further and further. Now we will take the sum of both the free float market capitalization, that is sum of 5 lakhs plus 1 lakh. The total free float market capitalization of two companies X and Y is 6 lakhs. Now let us understand the formula for calculation of the Sensex. Now Sensex is calculated using this formula. The sum of free float market cap of 30 major companies, that is originally taken, but here we'll take only two companies, that is X and Y. We'll take only X and Y into consideration, into the index value in 1978 and 79. Since when the Sensex has been started to calculate, at that particular point of time, let's say the Sensex value, base value of Sensex was 100 points, and the market capitalization of the Sensex at that point of time was how much? Let's say it was only 5 lakhs. So we will take that current free float market capitalization of all companies on the Sensex multiplied by index value, base index value and the base year, divide by a free float market cap in the base year that we have just seen. So that we're considering hundreds as the base value in the base year and 1978, 1979, and the 5 lakhs as the free float market capitalization in the time of 1978 and 1979. So the formula says that 6 free float market cap of the company, 30 major company, but here we are taking only X and Y. So we have just calculated over here, that is 6 lakhs. So we know 6 lakhs multiplied by the base value, index value, base value of the index in the 1978 and 1979, that was 100, divided by free float market cap in 1978 and 1979, that is 5 lakh. So that comes about to 120. So this is the value of Sensex, that is 120 is the value of Sensex calculated here. Now in the similar way, in the similar fashion, while calculating the real value of Sensex, the free float market capitalization of these 30 companies are taken into consideration. These are the 30 large cap companies listed on the Bombay Stock Exchange. You can see over here, you can see very well over here, you can see that these 30 companies are taken into consideration for calculation of the Sensex, that is ONGC, Wipro, ITC, TCS, Mahindra Reliance Company, Hero Motor Corporation, Tata Steel, HDFC Bank, HDFC Limited, Bajaj Auto, L&T, Vedanta, SBI, ICICI, Tata Motors, NTPC, Axis Bank, Hindustan Unilever, Coal, and all these companies, Sun Pharma, Infi, Maruti, IndusInd Bank, Adani Ports, Kotak Mahindra Bank, Yes Bank. So these are the 30 companies. Free float market capitalization is taken into consideration, and the same formula is applied, that is the sum of free float market cap of the 30 major companies into the base value of the Sensex and divide by the total market capitalization of Sensex at that particular point of time in 1978 and 1979. So this is how the value of Sensex is calculated on daily basis. It keeps on fluctuating, and each company over here, each company is given a weightage because we follow here a weighted average free float market capitalization. So each company has its own weightage in calculation of the Sensex current Sensex value. So that is the another part that we'll discuss in some future videos. That's how the weightage is allocated to each of the company based on the market capitalization. This and the based on the free float market capitalization. So this is how I hope you understood how basically the Sensex calculation methodology works over here. Same way the NIFTY is also calculated, but here only the difference is that the 50 companies will be taken into consideration instead of 30 in the BSE Sensex, and the base year for this is the 1995, and the base value is 1000. And this is how and the same time you will consider the market cap value, free float market cap in 1995 of the NIFTY. This is how the NIFTY is also calculated. This is how I hope you understood about the calculation methodology of Sensex and the NIFTY 50. This is how the free float market capitalization works. I hope you understood about this thing and like the video. Friends, I hope you understood about the calculation methodology of the Sensex and Nifty. This is how the Sensex and Nifty are calculated on daily basis and their prices are reflected on the stock exchange. So I hope you understood the video. Kindly do subscribe to our channel and press on the bell icon to get the future videos, updates and the more and more notification. Please do subscribe to the channel so that we are motivated for producing and making more and more videos on this subject for your understanding of the entire financial market and capital market in India and across the globe. Thank you once again. Thank you for watching our video.